Today is Technical Tuesday. We'll take a look and see where things are at. Give me a second. Okay. What? All right, I'll find that later. Okay. Good morning. What's happening? Um, Ernesto, were you the one that wanted me to take a look at Thinkorswim? That was your question from yesterday, right? Let's have a look. I'll log into Thinkorswim. Let's see if the ATR levels will show pre-market. Otherwise, we'll see. I'll give you the levels beforehand with my daily profit play indicator. Let's go indicator here. This is on the 5-minute chart. So futures this morning around 0.87, 0.86 to the downside. We should be gapping lower today. Okay. So we should be back below 6,600 this morning on the open or right at those lows. Let me take a look at our 0 DTE levels. VIX, I saw a new high was at 22 something. So that makes things a little interesting this morning. All right. Close yesterday around 66.54. So recentered there. Now this looks like a normal day, except we're going to have a huge box or a huge gap to the downside. So from the close yesterday, open today, we're just dealing with nothing but gaps. It does make things a little bit more interesting. So based on the opening price, I think we have to consider from here to this open, price was contained within about the 50% ATRs. I talked about that yesterday in the Gamma report with Kane. So with the gap lower today, I might want to shift it to the open and see where we're at. Okay, like I'll note the 150 and the 200% ATR based on the close yesterday, but kind of giving it a new day of its opening bell from open to close, what's price going to do? Likely stay within our kind of VIX box range. But we have an elevated VIX right now. It's over 20, 21. Yeah, 21.5 on the VIX, so it's up 13%. All right, let me log into Thinkorswim. Logging in. Okay. So let me change this to the close around 54. This is going to have to be updated. I'll go into studies, edit studies. And we want to change this to a manual and 6650. Was it 6654? Yep. Okay, 6654. Now I'll change this back. Manual reference will be 6654. ATR length 5, show the ATRs, yes. Okay, so we have our VIX box high, and it does look like the ATRs run out. Let me ask the coder if I can get these ATRs to be showing up. So if you update the indicator reference point, that it's showing the live ATRs. Okay, let me see if I can get them to do that where it'll show like the current day. Okay, that shouldn't be a problem. If I get it updated, then I'll just have a new grid share for Thinkorswim. Yep. So I see the same thing. I see the VIX box with that manual reference. I'm not seeing the current ATRs. These were yesterday's. Well, for at least what I can tell. Let's get some comparisons. So if I look at the manual reference here, 6654, 50% up is 6693. And I have fallen like 1 or 2 days back on the ATR tracker. I didn't even get a screenshot in yesterday. 10, 13. We'll just start at 1014, I guess. Okay, so today, let's get my ATR levels here. Um, Again, because of the coming gap, I'm likely going to modify this reference point to the open today. So let's get the VIX open. VIX poked about 22. So gapping higher in the VIX, down in futures, expect a volatile morning. I mean, that's going to be pretty much par for the course. Today's plus or minus, we've got a 38 plus or minus on the day. So certainly a jump. We've got 23 IV rank. That's a jump. Um, we could look at a reverse iron condor to see what it pays, but because we have higher volatility, you're likely going to have to go, maybe 25, 30 points wide, which is a pretty big dead zone. I would prefer to not do that. I'd prefer to see maybe we can go 50 points, 55 points out of the money and just get our morning daily profit play in. Okay. Because even with some gap action today, it's like we're going to be gapping lower. It may not be perfect to just like sell bear call spreads. This market might already be making its move, making its move lower based on a gap lower, right? So this is tricky. Like zero DT trading, it's tricky when you have these huge gaps. I mean, yesterday was a 1.2% gap. Today's a 0.86% gap, 0.88% gap. Okay, it just kind of throws things off. So the best we can do is align ourselves with market makers and see if they're going to win the day. What they didn't win was a Friday blowout move. What they did is they probably were heavy on Monday's compression. Even for a high elevated 19 VIX, very, very limited price action on Monday. Okay. So I will put here for today, note. So 10, 13, 1.2% gap higher on the open. Very minimum. Likely allowing market makers catch up from Friday's aggressive slide. I'm just updating this in the tracker. If the DPP indicator reference was Monday's open, price was very tight and stayed within the 50% ATR up and down levels. Okay. And then 10, 14. %, possibly revisiting Friday's low. We'll use the DPP indicator with Tuesday's open for reference and see where price plays out. Okay. So we'll come back to that. VIX at 21.8. Based on that math, potential swing on the day, 1.35%. Okay. 1.35%. So here is little technicals I drew up yesterday. High to low fib, hanging out around that 50 to 55%, just pullback zones. We should be looking at negative gamma today. I don't know. This seems like 66. It's like we're going to open right at this. All right. These are all over the place. You get like one huge gamma level. I said this one yesterday during the gamma report. 6,600 would be a big one to reference for this week. We're probably going to open there or close to it. So based on the close, 0.8%. Yeah, we're going to open literally like at this gamma support. Question is, does it offer support? And we're starting to work our way back up towards, we're still in negative gamma. So with higher volatility, negative gamma, the sell put, sell call, zombie drift to the upside is very difficult to find right now. We would have to get back above 66, 65 in order to revisit kind of this bullish market. Hard part is we're going to be gapping immediately open. And if there's going to be some falling towards the Friday lows, let's see what a price looks like on a reverse iron condor. I think that's going to be maybe the look for today. I'm not going to go for a huge dead zone. I'd like to keep it within like 20 to 25 points. Or we look at our extremes and we have some out of the money bear call, bull put spread combos and just try to get a good fill. If I go 5 wide and get $1 and set it up for the opening price. So let's say we open, let's measure out 0.86 or so. Okay, we go 0.86, puts us down to about 65.97. Okay, so if I park my indicator there and we look at our 100, 150, 200 ATRs, we look at our VIX box comparison. This should be about a 1.3% VIX move now. And maybe setting, the extremes, maybe 1%, maybe 1.1, 1.2. It could be one of those days if you want to sell bear call spreads, sell bull put spreads. I'd rather have it be, pretty wide and see if price can kind of come find it. So if I'm going to go 5 wide spread, I want $1. If I'm going to go 10 wide spread, I will at least want $2. Okay. This also is a higher VIX where the one thing I'm really liking is some of the setups we've taken for waterfall income. Putting in some of our income positions. Yesterday we took a trade that has about 13.2% room for error. The markets it would have to fall by December 31st. The market would have to fall 13.2% from all-time highs. I'm not saying that it can't, but there's enough support. And I think, obviously seeing the narrative quickly change is like whatever is happening right now is, I think, the necessary seasonal cleanse, this little weakness window. But I think we still focus on buying dips. I just think the dip needs to be a little bit lower than a 2 point. I mean, this was a 2.7% correction from high to low, right? Shows in one day from the high of the day to the low, but the close is like 2.7. The high low candle was 3.2. So it was a decent. I mean, that was the biggest candle we've seen in months. I mean, that size of that candle was essentially the same sell off as a 2 day move on July 31st and August 1st. So, of course, you wonder, is that like, we're just going to work our way right back up to the highs, and the 21 period is close below, close at. But again, bulls probably have to recapture that 21 moving average to get back to highs. Bears, they're so close to hitting the SPY and the Q's 21-day moving average. That's what I would like to see hit. At least hit that 21-day, or I'm sorry, the 50-day. This is the 50-day. Yeah, I've been watching that 50-day for a while. I hope it gets hit. All right. Ernesto, I'm going to take a screenshot of the indicator for my coder. Let's see if we can get this thing referenced. And I'll go to my daily profit play here, where it actually shows the ATR levels. Okay, so I'll send it over to him this morning. We'll get that repaired. All right, key levels. Let me make sure this is on the proper timeline study. So let's go to Friday's expirations first. All right, so biggest levels today pre-market would be filling this gap from Friday to Monday, and around the, we're going to be opening up below these levels. So, I mean, if we're opening at 65.90, 65.95, we're already checking all these gamma levels. Okie dokie. Well, not saying that we can't fall lower. VIX is at 21, 22. It's kind of anything goes. High VIX is good for us, though. If we follow the strategy for daily profit play, I'm just saying this is not a time to take on a bunch of risk. Okay. If I'm looking to take on extra risk, here's how I'm doing it. VIX is high. Selling premium is usually a good thing. Okay. However, if we sell premium with the 21 VIX, that usually does pretty well when the VIX reverts. If we come back down to 19, come back down to 18, 17. But we also could go higher. What happens if we go higher in the VIX? Things widen out, things get more uncertain. The higher VIX to me is I'm going to sell premium all the way back to April lows. That's what I'm going to do. I'm not messing around with like, oh, where's the market going to bottom? I don't care. It can bottom 5% lower. It can bottom 10% lower. But if I'm down to April lows, it's going to have to bottom 30% lower. And could we come back to April lows? Yeah, maybe. But I'd say very slim probability of that. So when the VIX is high, if we can get premium, I mean, that's what I did for Project Options Edge last week. We sold SPY ratio spread out to December 31st for $1.30. So the market would have to crash 30+% in order for that trade not to work. So, I mean, with the elevated VIX today, I might do the exact same thing on the QQQ. 24.8 IV rank going out to, let's go to December, end of the year. The lows, I believe, were the low 400s on the QQQ. April lows were all the way back down to 400. Now, granted, this is up 50+% off the lows. S&P's up about 40% off the lows. Could I get some premium here at the 405? Let's find out. December 405. So I can. I'm just, you noticing here, like I'm not getting a lot of premium. If I do, let's see. 1, 1, 1. Yeah, I'd have to do something a little bit more aggressive. Like maybe could I do a 112 where I would buy the 410, sell the 405, sell the 400, 77 cents for potentially a 400 naked put. Maybe bump this up a little bit. 82 cents. Maybe I work this up to get $1 at least an income trade for $1. Okay, so 430. I'd own shares at 415, 414. Probably pretty easy for repair. Um, we'll see. We'll see if this changes with the VIX going up. I'll take a look at these references, or I can take this into January and get a slightly longer. Now these are all weird expiration prices, but 420, 10. Like this one's not bad. I get $1,000 profit trap with a 400 naked put. I think I'm gonna take this trade for Project Options Edge. So let's see what this one looks like. So Q, 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 420 by 410 by 400 for $1 credit. Okay, see if that can fill. All right. Now, I mean, it'll be at the open. So it'll be a little bonus trade for Project Options Edge. Do a quick spot check on some dollar index. Okay, dollar index breaking this falling wedge. I think dollar index has room to get up to this 200 moving average. Bonds resume trading today. Bonds are poking some fresh highs. Kane and I talked about this yesterday in the Gamma report. Bonds at fresh highs, meaning this might be a little bit of a flee to safety. TLT looking to gap a little bit higher, tiny bit. 10-year yields down slightly. Oil possibly coming back to retest these May lows. I still think there's a lot of support on oil. I'm doing some positions where as long as oil stays above $50, I'm fine. I don't mind going longer oil. If we get to these levels, it's just defined risk, but I'm looking to stay long oil as long as, kind of 50 is my support, which is out of the way right now. And then gold, fresh highs in the day, rejecting a little bit. Gold and silver should be due for a pullback. Technically speaking, they should be like long overdue for a pullback. Expect some decent volatility. I wouldn't be shocked to see a double-digit correction on gold and silver. Now that it's becoming more mainstream, and you're looking at any headline news, it's people are talking about this is a short covering. This is going to go to $5,000 to $6,000. Yeah, it probably can, but not without volatility. I mean, gold doesn't move in a straight line. Nothing moves in a straight line. Okay, gold is up here. We went sideways for 4 months. Gold was up here. We went sideways for 4 or 5 months. Gold is straight up here, August to now. I mean, yeah, I know it can keep going, but I'm not buying all-time highs. Like I am positioning for puts and dollar cost averagings, but I expect there to be some type of correction. I don't know what the catalyst is. I keep saying maybe the alignment that I make is the dollar. The dollar goes up for a little short covering or a squeeze. I think that pulls back gold, but I certainly want to allocate more with the gold pullback. Mike, good question there. What's the downside of the collar trade? Follow-up question. If the underlying pays a dividend, you're in the money on the short call. Will you not get the dividend? Yeah, it's very possible if your short call is in the money, you're not going to get the dividend. Actually, that's a good question. I'm not really sure because you do own the shares. You technically own the shares, but a short call does have it covered. You might bypass. But I would say this: your heavy dividend stocks are not going to be high premiums. If you're getting into a collar strategy, you're not going to see high premiums on dividend stocks. So, for example, if I wanted to do a own Pfizer and put on a collar trade, yeah, there's a 6% dividend there, but I mean, the only premium I'm going to get is like $1 or $2, just off of live price. It's going to be like at the money covered call, one strike lower long put. Does that make sense? So, I mean, if you're trading for dividends, you're probably better off selling out of the money covered calls over dividend levels, or be mindful of those dividend expirations and try to either one, not have the price covered and allow the dividend to take shape, or you keep it out of the money. But it depends. It just depends on the stocks. High dividend stocks are usually low premium. Okay. The downside of the collar trade, mostly the downside of the collar trade is prices going higher and you're getting the stock called away. So I've got a couple minutes here before the open, but basically what Mike's asking is we had a session yesterday. It was Kane and I for the Gamma report. We do that Mondays at 2 p.m. And I did like a pretty deep dive through the collar trade, and it's one of my favorite positions for I want downside protection that doesn't cost me any money. So if I were to buy shares, I buy shares, I sell a call, and I buy a put. The downside is if price goes up, I'm getting it called away right here. That's the downside. So I'm essentially missing out on that price appreciation, right? But the reason this is a strategy is because I have to accept that, look, I'm putting on this trade so I can finance the protection. If price goes down, I move my cost basis all the way down. And what ends up happening to me is if I've done a good job protecting my position with my collar trade, if price falls, 10%, price falls 15, 20%, then I stop looking at collar trades all the time and rather, okay, now that I'm in this trade, can I just start selling calls and this price goes up and I give myself a bigger win, right? So I'll unpack that a little bit more. Let's get some price action going today. It's opening bell. So let's reference the open this morning. I'm getting an open right around 66, 65.90 or so, 66.02. So let's make a reference at 50, 65.90 open. So I'll change the indicator here, 65.90 open. $65.90 open. Hello. There we go. All right. So there's my shift. So now if we have this is the opening price. This is opening price right here. This is where live price is at. Here's my 50, 100, 150 ATR. Let me check the boxes. Based on the VIX around 21, we're probably looking like a 1.3, 1.35% move. There's 1.36 to the upside, 1.37. So yeah, the box is good. Okay, we're kind of in between. Let's see where we can go on the option chain. I do want to look at that trade on the Qs for Project Options Edge. Give me a moment here. I like that trade. If I went 420, 410, 400, a buck 21 in income, I'm going after this trade. Let me see if I get $1.20 on this trade here. $1.20 not filling. Should be able to get $1.15 at least. Just going after an income trade. $1.19, $1.18. Come on. Okay, got filled for $1.18. That's an official trade for my Project Options Edge. I'll put this in just a moment. I'm going to get these filled real quick. So try to get filled for at least $1.15 if you're going to take that trade with me in Project Options Edge. I'm getting filled for $1.17, $1.18. Okay. $3.36. Okay. Filled. I'm putting this in all my margin accounts. Let's go here. Okay, it should be all those accounts filled really quickly. 1, 2, 3, 4, 5. Okay, those are all good for $1.17. 120. That's a great fill, Mike. You took that same trade. 420, 410, 400 for January. It's a 111 for $1.08. Yeah, that's great fill, man. Great trade. Good fill. Cool. Okay, good stuff there. Let's go back to today. Plus or minus on the SPX. We're still looking at about a 45-point move. Wow. Wow. Let me check on the old SPXs because I do have a couple of rolls here I want to take care of. My broken wing butterfly bear call spread rolls. I want to see these stay below 66.40 this week. We're at 65.80. Yeah, I'm going to be playing with fire again this week. Fudge, man. I mean, hopefully we just get the correction out of the way. Like, now's the time. Let's get it over with. Let's hit, 3, 4, 5%, make some fresh lows, get this further out of the money. And then this trade is now looking pretty good. This 6,700 by 20. This one's up $480. If I look to close this one, the debit's still a little bit high. I'm just going to keep an eye on this one I want this to close at, like a $1 or $2 debit. I pulled in over $3 or $4 on this trade. So that one's out to the end of the month. I don't want to roll these yet. If I can get the 40 by 55 or the 40 by 60 to stay, out of the money, then that's like $650 of profit this week. All right, let's go into a fresh trade for today. All right, so I'm going to go out here. Look, we've got a center price. If I sell up to the 66.75 VIX box high, I'm just going to throw them out here at the VIX box and see, okay, based on current volatility, should we go past this level? I'm thinking no. So upside getting all the way back to the 100% or this VIX box high should be difficult. Can we get some premium up here at 66.75? Let's find out. 66.75. It's not awful. 75, 85. I get 45 cents. That's not what I wanted, obviously. If I went 75, 80. So that would essentially be the 100% ATR. The VIX box low around 6,500. I'm going to go pretty wide for today. 6,500. 70 cents credit. Let me see. It's not awful, but I'm going super low delta on the call side. And right now the put side is around a 13 delta. Why does it seem, I guess this is opening price. Now that seems right. So that would be my VIX box, 1.4%. I mean, we should be contained there. All right, I'm going to take this trade. It's trading for 75 cents. I'm going to put this in for $1 just so I can manage my risk. 6,500 by 65, 495. I'm going to go in for $1 on this trade. This is for daily profit play. And I've got a couple trades to post. So daily profit play, it's pretty far out of the money. If I wanted to do more of the expected move, we'd have to get a little bit tighter, right? If I want to go delta neutral right now, let me see how far out we can go if we did like a 15 delta. So 65. So if I did a 10 and 5, that's a 16 delta put. And then the calls, 35 and 40. This one's not awful. $1.50. Okay, let me see if I can get $1.50 on this one. Maybe $1.45. Come on, $1.40. That'd be a risk of 360 on the trade. Got filled. All right, I've got 2 trades in. One is pending, one is filled. Okay, so daily profit play. The one that is filled is a daily profit play for $1.40. So SPX today is the 14th. $66.10, 60.05, or 65. Sorry, those are 65. I did that yesterday too. My bad. So 65.10 and 65.05 for $1.40 credit. Looking for, let's go after $105 debit or lower. Okay, and then pending order. will be 10/14 expiration, 66.75, 66.80, 6,500, 64.95 for $1 pending. This is a wider out of the money DPP near the VIX box high and low. Okay. If you choose just one daily profit play SPX, I mean, I'm in both. So one is pending, and this also means this one may not get filled, right? This one might not fill while the other one is actually in, and I'm actively managing the trade. So the question is, do you want to be in a trade today or not? Because this one may not fill. Price may not move extreme enough to make a fill today. Okay, low from last week was 65.50. And I mean, even if we test the low, it's like the trade that I got filled on, my low is 65.10, 65.05. So it gives us room to poke the lows. It gives us room to take out the lows. And it gives us room to chop around, you know. All right, so let's see if today, 1, 2, 3, 4. That trade is filled for $1.40. I'm going to put in the closing order at, I'll go $1, but I think $1.05 is stick to the mechanics. If I get $1, that'd be 40 cents. That'd be I mean, that's fine. I'm going to go dollar debit. So if you go dollar debit, it's about 28%. You go $1.05 debit, it's going to be like 25%. Okay. 66.55 and 6,500, 10 wide for $1.60, Larry. Good. Good. All right. Let me get so the one that's filled, 65.10. Let me write this down. 65.10 on the put side and 35 on the call side. I'll get this labeled. So price action here. Put in a couple of lines for today. 65.10 there. And 66.35 there. Okay. So I'm looking for price to at least respect this range and the guardrails for the day for our daily profit play. You know, price has room to be directional. We are in negative gamma by quite a bit. We are below the call support or the put support. So look, we've got to be aware that, you know, this market in a correction phase, these downside moves could be much more violent, you know, and that's okay. That's okay. A correction is overdue and needed. It's a cleanse, you know, call it 4, 5, 6% corrections. It's fine. This is why it's important that we just, or as we're taking trades, it's like we're managing risk. None of these risks are big. So if we get blown out by some crazy, you know, oh my gosh, the market moved, you know, 2% today. Okay, well, the VIX should allow it to move about 1.3%. And we're playing those levels. Okay. We're doing, pretty mechanical 15 deltas, which I mean, from a day-to-day standpoint, gives us about an 85 to 90% chance of profit on these trades. So we're still following the plan. All right, let me make sure I have the right one filled. 35 and 40 call on the 66s, 10 and 5 on the puts for $1.40. Just got filled on that trade for $1, actually. Okay, so I got filled on both now. That pending order for $1 has been filled. So now we have two. Okay. So now filled where that line in the sand is 6,500. So we'll go here. That's a 6510. Clone that and go down to 6,500. And then way up on the call side is 6675. It's way up here. So as long as the put side doesn't trash us, then we should be looking good for almost a full profit on that one, I would imagine. Okay. So hopefully price will stay inside of my VIX box. If we stay inside the VIX box, our $1 trade should be looking good for full profit, to be honest. I think price can stay inside this today and we get a full dollar profit out of that. My goal on that dollar profit is probably to take 70 cents of it, 75, 80 cents of it. I don't think I want to wait all day. All right, so let's keep an eye on all the stuff this morning. New guy, I saw your comment there. Anyone can explain my condor showing a debit versus credit. You just got to double check the legs, man. What's the sell side? What's the put side? Make sure it's a bear call spread. So you want your sell strike is going to be closer to the current price. Okay, so your sell strike, this is current price. My sell strike is closest on the call side, and my sell strike is closest on the put side. So it's establishing that line in the sand on the put side and the call side. So there's my bear call spread combo. There's my bull put spread combo. Gina says, need new broker, cash count, take a trade. Who's your broker, Gina? Hopefully it's not Fidelity, because that's what I hear the most as far as traders that are not able to trade. It's Fidelity. Moo. Sounds reputable. I don't know what that is. All my buy prices, one strike away, showing more than the sell price. So sell here, buy here. 10.5. That's showing a credit. Sell here, buy here. That's showing a credit. Are you flipping around your calls and puts on accident? Thinkorswim. Yeah. So Schwab would be Thinkorswim. I mean, I use Tasty Trade every day. That's where most of my accounts are managed. I look after some accounts in Schwab, which is I use their Thinkorswim platform. Thinkorswim has a web platform that's really easy to use. Their desktop application takes a bit of a learning curve, but it's a really good trading platform. But obviously, I want every trader to have permissions to trade. It's no fun to be told by the broker what you can and can't do. So if you have a brokerage account, whether it's cash, IRA, margin, portfolio margin, broker permission should allow you to trade. Especially, this is risk defined trading. So for a broker to say you can't take a spread trade, it's like, that's insane. I'm only risking today $400. Okay, I'm only risking $360. Why would that be something that I can't trade? It doesn't make any sense. So anyway, I know it's not easy to leave a broker, but certainly if your trading permissions are better, you will be way off. You'll be way better off. I have gone through a dozen brokers easily in my career between Forex trading and stocks and options. I'm pretty happy now. My Forex broker is, I've got partial with Oanda. I do have some money with Tasty FX, which is basically a new version of IG. And then Tasty Trade has been my broker for the last like 6 years. I was with Interactive Brokers for a while on the institutional side, but they suck. They're fine if that's the only broker you can choose. Interactive Brokers is fine. You get all the tools, you get all the permissions, but their fees and commissions are really bad. They're really high, and that's not fun. All right. Phil says, you have a script. We do have a PDF. Deanna, can you find that PDF? We have like a 10-page PDF. All it is, look, the secret phrases for this stuff, if you're every investor profile, here's what you want to have. Investor profile for options permission. Basically, you want to say my plan and purpose for the account is aggressive growth and speculation. You have to, that's the phrase, because options is like a leveraged instrument. Okay. Even though we're trading totally defined risk, and I know exactly what my risk is, we have to say it's going to be like speculation and growth. Also, I have 5+ years experience in the market. Usually it's 5+ or it's 10+. Just mark you have experience in the market, aggressive growth and speculation. They should give you, okay, brokers should provide level 2, level 3 permissions. And then you can trade pretty much whatever you want. Pretty much risk defined, spreads. You might even be able to do cash secured puts. Cash secured puts, maybe even naked puts if you want to manage the stop loss side. Depends on the capital that you have. But cash secured puts should be fine. You could do 2, 3, 4 leg trades on risk defined trades. Right? And then you have all the permissions you would need. If you own a position, you can trade options around it. You want to, put option trades in for income or speculation, you can leverage. You can buy deep in the money calls. You can do diagonal spreads. You can do fancy, all sorts of crazy stuff that you might even never have traded before. But the fact that you get the permission to do it and learn it and kind of learn into these permissions is a lot better than being told you can't do it. Like over these years, I mean, I'm not the type of trader that's going to say, okay, let's just keep it really simple for everybody. Let's do buys only. Let's do buy calls only. It's a horrible strategy. I feel like I would be doing you all a disservice if that's what I taught, is just making it so it's like the bare minimum. We buy calls, we buy puts. Look, I know it's easy, right? Buy a call. I could do that. I can do it on my phone with Robinhood, but it's not a good trade. Okay. So I would rather us learn a basic debit spread or credit spread, get a directional bias in the market if we want to have one, or like I'm doing here for daily profit play, we never have to have a directional bias. The market can go literally up, down, sideways. We can make money every single day. Let the market makers do what they've done for 50 straight years in all these crazy environments and make money. We can do the same thing. Okay. So a little bit of learning with me will go a long ways. This is the quickest way to get the broker to give you the permissions. And I mean, then you're off and running. Now you can trade how you want to trade. Now you can trade with no restrictions. Now what you have to do is just focus on, okay, every trade that I take, do I know my risk and reward? Do I know my line in the sand? Where am I right? Where am I wrong? What does this trade mean? If price goes up 1,000 points or falls 1,000 points, what's my trade? We have to know this stuff like it's playing chess. Okay. So it's just being a couple steps ahead of, if this is the trade I want, where does price have to be for me to make money? Where's my risk? What is my risk? Just a couple of those basic questions that you can do that in a couple of minutes. Okay. Yeah, we'll see if we can get that reference. Let me see if I can get that. Deanna, can we share that PDF in here? Do we have a link for that? Okay, and then we'll check on, let's see how we're doing today. So 1, 2, 3, 4. Okay, so I'm going to do the wide IC, which is already up about $50, and the other one is up about $20, $15. So collectively between the two, again, not really a plan to be greedy today. No need to be greedy. I'm up 60, about $55, $60 right now. So this trade for the wide one, I think this one's going to be pretty good for most profit. But if I want to hold it for the full 100, it's going to be like an all-day thing. So probably not going to hold it all day. I'll set this one at, I think maybe like a 30 cent. 30 cent would be good. But if I'm staring at both, I obviously pulled more credit on the first one. So this one is trading for like 30 to 40 bucks, and this was trading for 40, 50 bucks. I might just take the two winners and move on. Okay, so I'm looking at collectively, if I can pull in, 70, 80, 90 bucks on the day, I'll take profit and move on, take the two winners. No need to be greedy. So price-wise, we came back down to test the lows around 65.50. So now what's the day going to do? Well, it has full permission to go from this 50% ATR, maybe back to this 50% ATR. This doesn't really threaten my trades. I'm just trying to see if the thing will just stay somewhat centered for us. So this one already has the take profit in. And this one, I'll set the take profit I'll set it at 30 cents. I'll go 20 cents. I'll keep an eye on it just so I can kind of let both of these marinate for a little bit while we're together in session. Powell speaks at 12:20 today. Yeah, I don't know if that's going to be a big thing or not. Maybe it is, maybe it isn't. He's on the calendar. I do know that. So 12:20, participating in a moderated discussion in Philly. Okay, I mean, I'm sure there's going to be some comments. I don't see how Powell would do anything more than what he's already been dripping into the markets. Okay. So there's our box. And gamma wise, I mean, negative gamma, 66, 65. That's a long ways up. If we're going to go all the way back up to test that, I mean, that's a 1.67. That's greater than what the VIX should allow us to do today. VIX is pretty elevated. I'm not saying that the VIX can't break back below, 21 or maybe get to 20 if we're going to go up all day. But obviously staying up here, it's like we could just have some chop. I just want to make two winning trades in daily profit play and walk away. That is all I want. Okay, and if I'm not mistaken, we still have minimum data this week. So we don't have any CPI, PPI data this week. Everything's tentative here for PPI. CPI is not even on the calendar unless they were going to do it on Friday. Yeah, I mean, there's no non-farm, there's no CPI, there's no PPI, there's nothing. Retail sales, all tentative. Like, there's like no data, man. So another reason where I'm like, this is kind of the perfect window. We're still in this extended shutdown. Noise has kind of been stopped from Trump's side, but we're just in this weakness window. Earnings really hasn't kicked off yet to kind of stabilize the market. I did see that Bank of America announced that there's some private equity risk, and that's another kind of cause for concern as credit spreads have been widening a little bit on the private credit side. But anyway, we just have no data to go with. So Powell today, yeah, it's red, it's high impact, it's on the calendar. I don't think we're going to get much out of it outside of the same stuff that's been being released. I mean, a lot of Fed speakers have been talking the last couple of weeks. Here's Bowman this morning, right? Waller's been speaking. Marin's been speaking. They've all been making comments. It doesn't seem like much is changing on the watch tool, right? 97% chance that the Fed's still going to cut in October, and a 96% chance they're going to cut in December. So that's it. Market's already expected it. It's not changing. I don't think this is going to pivot hard, but there's obviously time. October 29th is not far away. Does something happen? I mean, my biggest concern for this whole market right now is like these gains for 2025. My whole concern is that the Fed is being more or less pressured into cutting. And again, I get they're not supposed to be political, as they're supposed to be an independent authority, but there's clearly a lot of political pressure that's just been basically you're trolling the Fed. Cut rates. You're costing the American people, blah, blah, whatever. You get it. But the point is, this is a crazy high probability. And so if they cut rates and then turn around in less than a year and have to raise rates, they look ridiculous, you know? But we don't know what the data is. It's like we don't know if inflation is going to run from 2.9 headline to 3.5% headline. We don't know if oil prices are going to bottom out at 55 or 50 and rip up to 70. Like anything, here's the deal. Anything that is an aggressive rate of change, if we see the bond market fall aggressively or rally aggressively, or the yields rally or fall aggressively, or the dollar rally or fall aggressively, or gold, it's like all these excessive rate of changes where things happen so fast, it's going to be very volatile and disruptive. So, I mean, I think that's why this market has been suppress volatility, because things blow out when there's a lot of uncertainty and volatility. Okay. So anyway, trade accordingly. All right. While we're at it, I do want to get that trade posted for Project Options Edge. This is new trade. QQQ. I did the 116 to 26 expiration. Buy the 420, sell the 410, sell the 400. I pulled in $1.18 credit. 111 trade using the higher VIX from the recent sell-off and positioning for this trade below the April 2025 lows. I'm willing to own QQQ if price is less than 400 by expiration, which is unlikely. Break even, if assigned, is, so I would have a $10 profit trap. So I'm assigned at 400 minus 10 minus $1.18, 388.82. Probability of profit on that trade is 99.5%. And the chance of assignment is 4%. Actually, less than that, sorry. Chance of assignment at the 400 strike is about 3%. Okay, that trades in. Okay, let's go project on my tracker here. QQQ. 111 trade for 116 expiration. Uh, 116 expiration. Willing to own. Break even would be 388.82. Yes, yes. Okay. All right. How are trades doing for daily profit play? Got to be looking good on both. Collectively, up about $65 on the morning. So I'm up 10% on the first trade. I'm up 55% on the second trade. $70 total right now. See, 70 is not bad. I think between the two, we can probably sneak up to the, $80, $90 profit. Okay. We'll just give this one a little bit more time. So yesterday, our profit target took about 70 minutes. I think we give this thing 60 minutes and prices pretty chill within this range today. We should be able to see some additional profit looking good. So give this just a bit more time. I've got the take profits already set. So if this one hits the, $1 to 105 debit or the 70-cent debit, I mean, I'm looking for this thing to hit my profit target. So I'll go after, I'm going after a 20-cent debit here. So 20-cent debit and a dollar debit between the two. Okay, a couple of working orders. All right. Trading MES futures at the same time, getting freaked out, looking at the wrong chart, thinking my condor is called and realize MES, yep, they're different. Okay. Hopefully, I don't want to see price being too reflexive off those lows, right? I mean, this is my trade for the day. I mean, I don't want to see price back above 35 today. Certainly don't want to see it above 75. I think I'm hoping this is just what happens. We've got, gap lower, little choppiness this morning, and that's fine. We just need a little bit more time. I just don't want to see this like crazy aggressive scramble to the upside. We're not in a positive gamma environment, so I would imagine that this should be, maybe choppy and trying to revisit the lows. That should be good for our trade. But it is volatile. Know that. Like we're at an elevated VIX. It's not going to, and this is what's crazy. Getting a VIX of 23, 24, 25, that's good for selling out of the money premium at a longer duration. If I went out 60 days, 80 days, 90 days, waterfall income, beautiful. Like such a good strategy to just generate some income far out of the way. Okay, project options edge, generating income far out of the way. Crash insurance, where is my VIX right now? If we get another spike up in the VIX, let's take a look at our Novembers. So November expiration is up about 45%. I mean, part of me hates to do this, but I almost want to take the profit on the November VIX because of somehow this thing is like, just like Friday's sell-off, it was contained like Sunday night to Monday morning. We don't have a lot of time in this trade. There's only 35 days left. Unless we're going to see like a big fat spike in the VIX now, I just think it might be, I hate taking the profit right now. I really do, because it's just not that much profit. But I do have another VIX hedge that's out to April. And if there's one that's going to pay us a lot, it would be that one in April, just because I have time. That way, if the VIX runs, I mean, here's the analysis side. I mean, if we run up into the 30s, if the VIX is up to 30 plus, I mean, this thing pays pretty well, right? So if we're going to run to like 30, 35, 40 VIX and be surprised, well, let's get it to freaking pay us. But time is of the essence of this correction. It's like, I don't think I need to be super cute with this perfect, trying to get this perfect little run. Let me see if I can close out this daily profit play VIX that we did for the November expiration. This one is pretty cheap. It's up about 45% return. It cost us a max of 381. So my debit was 283. That overall cost was $381, but I'm up 130 bucks. Let me see if I can close this thing. So if I close, see, we get like a 415 credit maybe. 414 credit. Mid price is 412. Going to 410. All right, I just got filled at 410. So I'm gonna close out. If you're in the VIX November VIX trade, closing at 410 credit. So the trade was in for 281, closing out at 410. Deanna, I'm going to post that officially for project option or the crash insurance masterclass trade management. So the VIX November expiration entry was 281 debit, closing 4.10 credit. Taking the quick profit. Now we have the VIX with April 2026 expiration, offering more time on some wild and crazy spike in the VIX. It's so easy for that one to turn to flat. So I'm just going to take the profit. Is there anything to do with the MES trades? Probably not. They're so far out of the money on that one, Catherine, that there's probably not much to do on that. Right? If we go to this one that expires, the 6,000, it's like we're so far out of the money, we're just going to risk that like $400 or $500. Yeah, there's not much. And again, consider the trade-off. This trade was going to cost us like $500, and I mean, this account, for example, I'm risking $500 in this account. This one would have paid like maybe $10,000, $15,000 on a hedge, right? But I'm up $96,000. I can afford to let that $500 go. So that's the cost of my insurance of like, yep, I paid the premium. I didn't need it. The house didn't burn down. So that's the trade. So there's nothing to do on that one. But this hedge here, I mean, both the 6,000 and the 5,000, like they're going to expire worthless. It's okay. You're going to add an extra waterfall. I already did, Bruce. We traded it yesterday, man. And we traded yesterday, and I said if we fall a little bit lower, then yeah, I'll probably add in another waterfall trade. But we're right. We just came down and test Friday's lows. So I'll wait. I'm going to see, do we break the lows? Here's symmetry. If we go from high to low, lower high to lower low, then waterfall income, bring it on. Probably a strategy 1, right? And then possibly a strategy 2, because I know I can get myself a much further out of the money trade. But I want to see if we can hit some fresh lows this week, not just come down and test. Because here's what price does. If we go high, low, and we have a flat pattern, this probably means more downside, but it's just going to be like choppy, volatile price action. Okay. So I'm gonna get an exact measure move. Here you go. Let's go box here. Let me find exactly Friday's low. So that's Friday's low at 52. So I'll take the high and the low, high to low. And let's say that yesterday was the high that we put in for a retracement. Okay, so symmetry right around 64.60. Okay. So I'll label this one. Corrective symmetry 64.60 for waterfall S1, S2, new trades, and possibly a little bit of a short-term low. So if that level gets hit, okay, we'll keep an eye on it. But we retest the lows from Friday. Now we see how price wants to continue to behave today. We need price to stay here. If it's lower than this, higher than this, higher than this, we have $1.40 and $1 worth of profit today. I'm not trying to be a hero and take all $240 of it. Okay. If I can get close to $100 today, I'm happy. Indicator codes available for daily profit play. What's that question? Are they're different than the ATR levels of the ones with the clouds? This is my daily profit indicator. The yellow box is my VIX box. That's my current value of the VIX divided by 16. And then the ATR levels, it's the 5-period daily ATR. 5-period daily ATR. So I just comboed that in this indicator. That makes sense? Okay. So keep an eye on this morning. See how we're doing. Up $60 and flat on the original iron condor. So 35 and 40 was a bit tight on the call side for right now, but we'll see if we kind of settle back in. Hopefully we settle back into like 65.90 or 65.80 or so. I mean, obviously, if price is going to gap today, like this is the hard part. It's volatile. So if we're trying to fill today's gap and then we're trying to fill today's gap, like this gap from Friday's close, this gap from today, if we just test and settle, totally fine. But if we test and stay, well, I take some heat on this one, but I can win this one. You know, like I don't know what price is going to do today. I hope it's not going to go up and stay there. I hope it goes, down to retest up here, find some structure, find some resistance, and sell back off for, maybe a retest of today's lows. They are the daily profit play indicator. Absolutely. This is the same code you have. You have a TXT file or a text file you can copy in, and you can go into your Pine editor. If you go into your trading panel here, you have the code. So there's a text file for TradingView to have the exact same indicator that I have, and then there's a grid to download in Thinkorswim. So you can have the exact same daily profit indicator that I have. Yep. So daily profit members, you have it. It's inside the classroom. It should be inside the classroom. Let me double check. Let's go show all. Let's go to daily profit play. Indicator install Thinkorswim and TradingView. So install the indicator. So here is your Thinkorswim download, and here is your TradingView code. So if you click on this manual code, this is what you copy and paste. You copy this entire code and you paste it inside TradingView. Build out your indicator. So you want to go onto your Pine editor. Again, that's why I said watch the video. The video, I do it in like 60 seconds. But you go into the Pine editor panel, paste the code, and then add it to your chart, and then you can save it as DPP. But it's right there inside the classroom. So I'm inside the daily profit play classroom. Go into your indicator, top menu here. Click on this, install the indicator. And then click here to access the manual code, which is for TradingView. This is the video. It's 15 minutes where I review the video and give you an explanation on how I use it. Okay. No, all good. So make sure you get it. But every daily profit play member has it. Okay. So let's see here. All right. Let me see where we're at for today. Up 60. So the call side right now, the 35 by 40 on the original iron condor that I did, the daily profit play for $1.40. That call side, I mean, it's still 30 points away. It's just price is obviously sharply moved up. So I just need a little bit more time. If this thing will kind of stall here for the next like 15, 20 minutes, this is probably fine. If we come up to maybe 20 or so, I need this to fall a little bit back down. Obviously, the line in the sand for the day is 35. As long as we're less than 66.35, we're fine. Okay. But obviously, I acknowledge that this market finding a 100% ATR, or even me referencing the opening price like we did here. Go back to this. So referencing the opening price, I admit that if this is open price and we tested the 50% ATR low, we could also test the 50% ATR high. So what I'm hoping for is price. If it's going to stay here like this would be fine to just kind of contain price, and we shouldn't see a huge threat either way. I just don't want to see price do that, right? I don't want to see price get to 100% ATR. So let's see what this percentage is from low to high right now. So we opened here, went lower. Okay, if we hit the ATR around 66.35, that's a 1.2% move. The VIX is 2140. We should see at most today, based on this VIX, we should see about a 1.3% move at most. If market makers do their job today, shouldn't be anything more than 1.3% from, kind of high to low. So if this is the low for the morning, we shouldn't be going too much higher than this level. And obviously, I'm hoping it doesn't go there and stay there. I'm hoping that it goes there and retreats. We actually have a ceiling today, So, all right. So again, I'm not going to close out the first trade for a loss. I'm down to about $20 right now. The other one's up 60. This one, by the way, I'm going to go ahead and remove the take profit. I'm going to go replace for 10 cents and try to get $90 out of that one, just because the trade is looking promising and I might as well get most of the profit out of it. And I'll go 5 cents and just take as much of it as I can to close it out today. But ideally, what I'm looking for is if I can get this one back into, let's say, 20 to $30 profit, and this one's sitting at 60, $70 profit, I'll just take the combo win. Okay. So hopefully price will cooperate. All right. Couple things to chat about. Yesterday, waterfall income live trading session, 11:30. We had a 2-day workshop last week for strategy 1, strategy 2. We will be probably posting another trade. If we get a retest of the lows or a fresh low this week on the markets, then I'll probably throw another trade in for waterfall income. Took a trade today on project options edge on QQQ. Took profit on crash insurance today. We do have a winner on pinch point. NWS is, we want to see if price will fall a little bit lower on that one. NWS for pinch point. I'd like to see this go a little bit lower. We have a break even around like 27 and change, like 27.20. But we also have a good looking winner on MGM. Oh, son of a B. I tried to get out of this one yesterday. MGM is now, I think, our put level. Let me double check on MGM. So this one's still in profit. It was up like $90 yesterday. 32 by 34. Trade only costs 84 cents. So we only need price. Gosh. Is that it? Like, come on, man. Don't retrace. Let me see if I can close this thing down for a winner. So right now, 80. I should be able to close it for like a buck and change. Let's go with $1.70. So most I think is $2.60. Okay, it's not as liquid as I'd like it to be, but it's still profitable. I think I'm just going to take it and protect it. $1.50, not filling. $1.45. Try just in the mid price. Puts us up about $60. All right. Hopefully I can squeeze out $50 out of this thing. So $1.34. $1.30. Son of a biscuit. All right, I'm going to take partial profit here. Hopefully I can just get filled. 120. I mean, come on, man. All right, just got filled at $1.16. That's pinch point. I'm taking the winner on that one. It was up like 80, $90 yesterday. I couldn't get filled to close that out. So I just thought, I'll wait and see if it just a little bit more time helps me close it out today. I'm obviously taking less profit than I want, but that'll be an update to MGM, which is trade number 37. Put this in for pinch point. Where's it at? Here it is. So trade management update. Trade number 37. MGM. Entry 84 debit. Closing for $1.15 to $1.20 credit. We need MGM price to stay less than 32 for full profit, but current price is 32.63. 63. So I'm protecting the win. All right. So dollar 16 credit. So just under 30%, 27.6% winner. Not great, but rather protect the profit than not. Yeah, Bruce, we're working on those. Deanna, any updates on that? I asked for those. Deanna said they're showing up on her side. Let me see if I can just refresh. Let me go back to my one-click trading. Let me log out. So I'm going to log out, log back in, and see if those have been updated. So give me 1 second. So let's go to logging back into the classroom. Let's go to waterfall income. Waterfall, masterclass and trainings. I'm still showing 9 items. I need more. Yeah, we need to pull those recordings. So September 24th, I have a session. And last week on the 9th and 10th, Thursday, Friday, we did two classes. So we are going to get those updated. Okay, look, teaching last week, 9th and 10th, is not going to be much different than going back to this original workshop that I did in August. This is a strategy 1. So this is strategy 1. This is strategy 2. This is a combo. So this is a 3-day workshop. This is strategy 2. This is strategy 1. Going into September, the 8th and 9th, this is strategy 1. This is strategy 2. The 23rd, this is strategy 1. The 24th, we're missing that recording. That'll be strategy 2. So there's plenty of other strategy 1, strategy 2 references, but we'll get those recordings posted. Are there links to the 2 practical options courses? Yep, I'll share those as well. Practical options. I've got the quick guide for $27. So practical options, $27. There's the link, and the full course, which is 13 strategies. Also, if you buy the full course, I will give you a PDF. I've got a strategy guide for it. Practical options, full course. There you go. So those are just on-demand pages. Thanks for asking, Paul. Okay, let's take a look at the tape for the day. Quick heat map. Big hit from Mag 7. Look, I'm surprised that unless this is like fighting back. I mean, look at the heat map today. Nvidia down, Broadcom down, Tesla down. Like, these are nasty, nasty big tech names. But interestingly enough, the market is we're 53% declining. It's red. How the fudge is this market responding like this? So unless it's just like buy the dip on everything, right? Let's say Nvidia's down. What's the price look like today? Off the lows a little bit. Tesla off the lows a little bit. It's just kind of wild that, I mean, the price action off the lows, Microsoft off the lows, Meta off the lows, Google green on the day, Broadcom off the lows, Amazon green on the day, Apple off the lows. So it's red, like everything's red from we're just off the lows. I mean, that's not a chump change move. That's a 70-point move off the lows. Right? Like, the market's already gone from the lows today. I mean, we've already gone 1% off the lows. So hopefully, like I said, I mean, even going from we calculated out the VIX around like a 1.3% move today. So from low to high, this is like 1.2%. I'm just hoping that we don't stay here. If there's a little bit of a ceiling today, I don't know. We'll just give it some time. But the original trade for a buck looks really good. Like that trade should be probably no problem getting filled for full profit today. Right now, it's still up 50 cents. The other one's down $60, which is annoying because the call side's been threatened a little bit. It's still 18 points clear, 17 points clear, but obviously I need price to kind of get back to like 6,600 to center itself. So, all right. I know we went a little bit long today. That's okay. Let me talk a little bit more about some waterfall income. And I want to make sure that we get those classes updated. You do have those classrooms available. So here's what I would say. If something like a, index swing trading income strategy for strategy one sounds interesting. Like, yeah, I like the dollar cost average into things that are built to literally go higher every single year. And when they don't, they're way less volatile than being into a stock. If the index is down, 10, 15, 20% ever, and you buy the dip, think about what that looked like for the last 30 years of trading or the last 40 years of trading. I mean, I understand